Good morning to everyone. We're live to our radio audience, our social media audience. Thank you very much for joining us today as we go through your regular morning market checkup. And how are you doing, our darling Stephanie? How are you?
Fine, how are you, Mnyumba? How are you? It's actually good
Hi.
morning.
Good morning to you, Radiant as usual. Thank you very much to everyone who's joining us, and thank you to you, Stephanie, as we take off today on our Finance and Money Tuesday. Where today we're going to go through the bond auction on Friday that happened, the GRZ bond auction, and then we're going to go through some of our market data, our regular market data, as well as touching on some points on our main topic of discussion today. I'm going to deviate a little bit from my talk on insurance today to having the conversation, Stephanie, about finding clues to what your moneymaker is. What is your moneymaker, your gift? What are the clues, things that you should be looking for in your life, and also how to maximize that thing? Because I always tell people your income is your number one wealth building tool. Okay, that is the number one thing that comes in from that. That's old knowledge. That's historic knowledge. And if you do not discover what your best income stream is, and if you do not maximize it, then it becomes very difficult to keep up with inflation, grow yourself, and then you keep complaining, saying the price of things are going up. Meanwhile, you're just doing the wrong thing. That's really it. You're just doing the thing that's
Mm.
not getting you paid the way you should be. You're selling the wrong product on the market. But anyway, let's start with our auction report for July 2023. We're kicking off with this one first. This is our auction report for July 2023. This was the bond auction that took place on Friday. This was a record. Now I'm starting off with a little bit of different information. This is the position of the euro bonds that were actually sitting. These were the latest euro bonds in terms of the $1 billion one. You can see interest rates were very high because we're in default status, and this thing has started to come down. And you could see the price has started to come up, mainly since the announcement of our debt renegotiation. So the rally in our euro bonds, pushing them up to 58, which year to date effectively has pushed them up 26%, has actually pushed interest rates down on our euro bonds as well. So this is just a little bit of a headliner to tell you this is probably what drove this bond auction result. So if you take a look, interest rates in this auction came down a little bit to about 25.1% in terms of the composite rates, but interest rates on the 2-year, 3-year, 5-year and the 7-year all remain unmoved. The big move was the 1-year, the 10-year bond, which moved down by 1%, mainly due to large oversubscription, and that pushed the interest rate down. So if you take a look very carefully, this is what we call our GRZ bond yield curve, which shows that the yields on the 10-year flattened out a little bit, giving us a fully steep yield curve. Now, the funny thing, Stephanie, is whenever you see this, or to all of us watching, whenever you see these interest rates slanting up like this, going from 18, 22, 24, when you see that, that is called a steep yield curve. And that means those are signals of an actual growing economy. Now, remember, this year we're going to face economic slowdown because we're expecting we have a recession in exports, we have a recession in copper, and we're having a recession also in agriculture and also energy. So, energy, agriculture, and mining are all under a serious recession at the moment, and as a result, they're going to slow down the economy. But the posture of the interest rate curve is actually showing that we are ready for economic growth. That's actually some of the better news of it, that the steep yield curve means good for us. Now, here's some of the data looking at it all together. When you see, if you look at it all together, you see that this was the biggest bond auction actually in the history of all bond auctions, in terms of not in terms of how much was actually done, but in terms of the total amount that was raised. 4.9097 billion kwacha was raised in terms of the money raised on the bond auction. That was up 270% from the last auction, 479% from where it was last year at this time. 4.097 billion kwacha worth of bonds were actually issued. Sorry, not issued, but was raised by the government at the last bond auction. 189 million in terms of the 2-year, up 124%. 3-year bond, 632 million, up 277%. 5-year bond, up 561%. to 920 million. 7-year bond up 970% to 466 million, and the 10-year bond 1 billion kwacha raised it in the 10-year bond, up 58% from where it was last time, and the 15-year bond also up 359%. This was an all-around performance, oversubscription, overraise everywhere, except the 2-year bond was the only one that underperformed its target. Everything else fully performed its target, 158% more raised than what was hoped to be raised. So they raised extra. Obviously, this covers up for all the lack of activity that happened over the last bond auctions, where we've seen paltry raises altogether: 158%, 142%, 133. 10-year bond 235% above target. That just shows you how strong this last auction was with the 15-year bond. So a lot of this was offshore players, actually. Ironically, a lot of this was offshore investors, but we did not see the change in interest rates, in exchange rates, mainly because we have such a backlog of exchange rate demand in this country. So there was so much appetite for exchange rate that whatever came in from the offshore investors basically got wiped out by the internal demand for Forex in this country. You can see the monthly composition this time was more towards the long end, and this is what we're looking for in general. 58% of the raise was done by the 7, 10, and 15-year, meaning we're pushing out a lot of our debt repayments to a further time when we expect the economy to grow. And we've actually seen that the long end performed better in terms of the 7, 10, and 15-year, mainly because of the 10 and 15-year, 193% above target. So you can see this is all about long-term plays. Mainly, this was the offshore investors coming back into the market. And it's a sign of it, but we're not sure yet if this is a trend. Remember, this is a once-off shot to the arm. We have not seen if this is a trend yet. And we have to first analyze whether it's a full-blooded trend. Now, if you're looking at year-to-date data in terms of what we're looking at from this bond auction, what this bond auction has done, and it's taken our year-to-date position much stronger. The country has now raised 10 billion kwacha in government bonds altogether year to date. Remember, this number was 6 at the last one. It was 6.4 at the last one. Now we're looking at about 10.5. So we've almost doubled, very close to almost doubled, thanks to the last auction. You can see that 2-year bonds raised 1.4 billion, but the star performer this year has been the 10-year bond, 3.3 billion of that. So 33% of all the money that's been raised has been in 10-year bonds this year, with the composition of another 13%. So 32%, of this year's raise has been 10-year bond, 13% 15-year bonds. So about 45% of all the money raised this year has been sitting in 10 and 15-year bonds, which is good for the government altogether. But against our targets so far, we've only performed 58% of what the government has been trying to raise in terms of its government bonds altogether. So you can see that now we might be getting a recovery in this, but a lot of it has got to do with long-term bonds. Now, by the way, that's good for the country. When the majority of funds raised are long-term, that's also good because it pushes out a lot of what needs to be repaid for the government, and they can bank on the economy growing for them to be able to raise the taxes to repay this money, as opposed to trying to go back onto the market to raise more money to try and repay this money. So that's what we're trying to avoid altogether. Now, going on to the front line, we also are seeing that the long end is up 62% in terms of its performance from where it was last year. Out of its performance, while the short end is 54%. But we're seeing that the composition is 51% of the money has come this year from the long end of the bond curve, while 49% has come from the short end of the bond curve. This is still good signs for us. But we should take a look at how long this trend persists. Now, getting into how these bonds performed against the last auction, as you can see, the 2-year bond jumped from 84 to 189, 3-year 167 all the way to 632. The 5-year bond jumped from 139 million kwacha raised to 920. So you can see this is where a lot of interest was really sparked. This was the biggest growth point, while the 7-year bond jumped from 44 to 466. And we also saw the 10-year bond jump from 745 million kwacha raised to 1.17 billion kwacha raised, and the 15-year bond also went up over 4 times, almost 4.5 times, from 155 million to 713 million. Now, if you're looking at performance against target, you can see, as I said again, the number one that performed, all of them performed above target except for the 2-year bond. So the government managed to raise a lot of money, mainly due to optimism of what is returning back into the market. But we can see we went from 51% performance to 158% performance, mainly due to that 10-year bond, 235% above target raise. So we're seeing appetite for government bonds. Now, we also cover what's called bid rejection rates. Bid rejection rates have also shown that how much of bids were rejected. We saw bid rejection rates rise by 14%, mainly due to the fact that they were even rejecting 10-year bonds. And I think that obviously if they didn't have to raise as much of 2.6 billion, they could have rejected more and started pushing down interest rates even further. So you can see that the rest bid rejection rates were not too high. In fact, they were actually lower than the previous one. The 2-year bond bid rejection rates were lower. 3-year, 5-year was only slightly higher. 7-year was lower, and the 10-year was lower. But it was 15-year. But the 10-year bonds bid rejection rate was up from 5.5% to 29%, meaning the government was more selective. They were able to reject a lot more 10-year bond bids because there was a lot more appetite for them, meaning this is what we see when we either see institutional capital or we see international capital. They love to gravitate towards the 10-year bond in general. When you're looking at bond performance in terms of the trend, you can see this has now fully reversed the trend. This is the highest performance in a long time, 193% in the long end of the curve, 129% in the short end of the curve, 158%. The last time we had a fully subscribed bond auction was in January. January was the last time we had a fully subscribed one with 102%, and before that we only had it in September. So we seem to be building up a bit of a trend here from 51% subscription to 158% subscription. So let's see if this trend continues, then we might be on the cusp of a bond rally, which will then start to signal a stock markets rally. Remember what I always say, people, a bond rally precedes a stock market rally. Okay, repeat that after me if you can write that down in the comments. A bond rally precedes a stock market rally. Okay, so whenever you see bonds doing well, it means the stock market is preparing to do well, and that's especially if you start to see interest rates collapsing. But for now, we have not seen interest rates collapse. We're seeing them holding strong. Now, in terms of rejection rates, historically, we were seeing rejection rates actually held quite strong in the long end. Long end rejection rates were actually quite high, especially in February, because interest rates that they were expecting were too high in terms of the percentage. And what we've seen this time is long end percentage rejection rates were very high. So when you are seeing high performance and high rejection rates by the government, then that means that that's pressure to bring interest rates down. Now, remember, people, bond interest rates signal the retail interest rates. So whatever interest rates we're looking at in terms of economic activity, whether it's businesses, whether it's listed companies that need to borrow for expansionary activity, interest rates are led by bond rates. So remember what I always try and tell as many people is always look for leading indicators of change, not lagging indicators, leading indicators. For example, I always say, if you want to look at where the CPI is going to be, look at import prices and look at producer prices. Producer prices and import prices are leading indicators of consumer prices because consumer goods are either produced or imported. So if they're coming in more expensive, it's expected that the consumer is going to buy them more expensive down the line. So if you're looking at interest rate leading indicators, bond interest rate leading indicators, the bond interest rate serves as a leading indicator to the commercial interest rate. Because when you start to see government lending rates coming down, eventually commercial lending rates will follow them later. And what leads bond interest rates to come down? High subscriptions, high rejections. When you start to get to high subscription, high rejections, you start to see pressure pushing down on the interest rate. So this doesn't mean that we're going to see this happen immediately. Remember, these things usually have a 6-month lag. So expect somewhere in the next 6 months, that's when you start to see the pressure on interest rates start to erode. And then eventually that will then collapse into starting to see the pressure on commercial rates, probably the next year, finally also start to tick down slowly. And that's when you start to see a lot more capital go into the private sector at much faster rates, leading to growth of the economy from there. And that's when you start to see the stock market spur much stronger, or the results of the company start to spur much stronger. But usually the investors are looking at these leading indicators when they dive into the stock market. So you can see the bond markets there. Now, I often get asked the question, does this mean bonds are going to underperform? Rarely it means so. Bonds always perform somewhere around 4 to 6% above inflation, even in times where they are not in season. Okay, they still give you reliable returns on investment, even when they're not in season. But when they're in season, on average, they give you about 8 to 9% above inflation. So always look at this: that the bond market will still perform decently at around 8 to 6%. Okay. Somewhere between 4 to 8%. Sorry about that. Somewhere between 4 to 8%, 4 to 6% when they're off season, and we're now looking at a stock market rally, and about 8% above when we're looking at a bond market rally. So that's where we're looking at. But these rejection rates give us a notice of what is happening. So as you can see, interest rates, what we call composite interest rates, came down from 26% down to 25.5. They were still way above the lows of 23.4 where they were. In fact, they were one time heading towards 20. And as you can see, the average bond tenure is rising, meaning that the government is able to raise a lot more long-term capital. And if they're able to raise a lot more long-term capital, it puts them under less pressure. And that's much better for them because the economy can grow in the meantime. So when the duration of bonds also starts to increase, there's less pressure on the government for cash flow coming out of the economy. So that is your bond auction roundup from the recent bond auction 2020 for July 2023. We have a question here from one of our viewers. Thank you very much, Vernon and Adino, for joining us. And we've got Jebbies here, who has asked, good morning. I came across a term known as the bond ladder portfolio. And from the last auction with the 10-year with most bids, would you advise anyone to follow this portfolio model, and would it beat inflation, preserving buying power? Now, the bond ladder basically is a way of stacking bonds in sequential order. So what people usually do is they buy a bond that will mature in 1 month, another one that will mature in the next month, another one will mature in the next month, meaning that you're also getting coupon revenue and maturities happening sequentially. Now, what the bond ladder does is it evens out your interest rates. That's what it does. Now, I train people to do something called the snowballing ladder. Okay, that's actually one of the main things I actually train people to do in bond investing. Meaning, buy a bond this month, buy a bond every single month, and make sure that you are able to get coupons. If they've been reissued, you get them every 3 months. But if not, you'll get a coupon being paid to you every month if they're sequential. And also, when they mature in a ladder. In other words, when one maturity comes in, you get to reinvest it and its coupon, and then you push it back into the market. And you keep doing the same thing. It's basically like a rotating wheel of investing. It's actually something I advise to do. I don't advise people to do 10-year bonds unless they're looking for a big coupon they're looking to reinvest. So I only advise people to invest in 10-year bonds when they've got a huge lump sum of money, because then they're able to leverage the coupon with their savings rate, and then they're able to invest that a lot. Now, the base value you're going to get will probably lose its value against inflation. 10-year bonds, the principal tends to lose against inflation due to the average inflation rate of Zambia. That is the reality. Okay, so what you're really leveraging is a bigger coupon that you can reinvest, and that's what you do. If a person comes to me, and I do this with clients all the time, if a person comes to me with a million kwacha, 500,000 kwacha, something like that, they said, look, I've just received my pension, my gratuity or something, and it's 500,000, it's 300,000, I've been working for a while, what should I do with it? I would sit down with them, call up a banker and say, can we organize 6 sequential bonds for this person? Because I'd like them to be reinvesting this money, but I'd like them to have to get used to a monthly income coming in. So can we put together 6 sequential bonds so that there's a coupon coming out, let's say 10,000, 15, that they can keep reinvesting for the next 10 years. It locks the money up for them for 10 years so that they don't touch it, while simultaneously they've got this income coming in that they get to reinvest all the time. And especially entrepreneurs who maybe have got I've got businesses where there's a huge windfall, but they don't know what to do for the next. They don't know what their next income or their next dividend or their next payout or cash out is going to be like. They're going to be very careful with it. So those are the kind of strategies. But it really, whenever you're looking at what strategy to employ, a ladder is a very good strategy at protecting you from interest risk, not really just inflation risk. Inflation risk is more protected by shortening your bonds. Interest risk is protected by laddering. That's the strategy that you're looking for. So that's the line I would say there, Jay, before asking that question. You really have to sit down with somebody to advise you on what the best strategy to do with yours is. It's really also based on your goals. How long do you have? I can't tell you to buy up a 10-year bond if you've only got 5 years until retirement. At the same time, I don't know what your risk profile is. I don't know what your income flow is. Those all affect what kind of decision I can sit down and have you make. Okay, so that's just something I wanted to put out there. So, Steph, let's get back to. Yeah, thank you very much. So let's get back to our main discussion today, or let's get back to the markets today as we touch up on a few things. We did see that Kwacha moved up to 19.5119. 0.4% up, 2.73% up from yesterday. The stock market was down yesterday 0.8%, mainly due to Zanaco and Zambeef, which lost a bit of their value yesterday, while the bond index was up 0.16% and the US dollar bond index was up 0.41%. Interest rates were down 0.01. So the secondary bond index in US dollars up. That's also a positive signal as well. Now, starting to see as well, we did see that as well, the Rand was up 1.05%, up down 0.9% on the week, but up 15.99% on the month. So if you're a cross-border trader, that's a bit of a struggle for you. If you're a customer of cross-border traded goods, that's probably going to reflect. So this is what I mean when I say, look at the leading indicators of potential inflation. GRZ bond index yesterday up 0.1%, up year to date 15%, while the US dollar bond index up 7% year to date, and the interest rates up 0.49% year to date, but down 0.01% yesterday. Commodities yesterday, we did see copper bounce back up 0.58%, while oil was up 2.17% on the risk of OPEC decreasing its output. So OPEC decreasing its output and a potential Chinese stimulus coming in. We also gold down 0.26%. However, cryptocurrency down 2.49%, Bitcoin, Ethereum down 2.2%. So we both had a sell-off in both of those things, even in the face of a stronger kwacha, while we also saw gold up 0.1%. On the market. So we saw the volatility again of Bitcoin. So year to date, this is how our broad asset markets are looking. Bonds up 15%, USD up 7.8%, gold up 15.8%, and stocks up 12.1%. We are still in a defensive year and expecting this year to continue down this path. Bitcoin up 88.6% in regular terms, and Ethereum up 65.6%. Remember, we're waiting for inflation data, so this will actually start to update. Remember what I always tell you people, cryptocurrency is very volatile. Go in there cautiously, go in there limited, because when you get your fingers burnt, it's not my fault. I have told you. It is extremely risky, but it's a way to hedge. Okay, you hedge, but you do not go all in. Right. So yesterday we also did see that our four horsemen gave us strong indicators of the market. We did see that Spanish PPIs, which are a lead indicator of European inflation, also came down by 8.16% year on year, meaning that we've got pricing pressure coming down negatively in Europe, and that may slow down in rate hiking expectations. Korean GDP grew surprisingly 0.9% in continuation with last year, and also 0.6% quarter on quarter. So some surprise Korean economic growth came in. Bond auctions in the US are still elevated 5.27% and 5.27% for 6 month and 3 year, 4.28% for 2 year notes, meaning that we're still getting rising interest rates in the bond market in America. Industrial data also shows that we had some very weak PMI data. Manufacturing PMI that came out of Germany, manufacturing PMI out of the Eurozone, global manufacturing PMI that came out of Britain and also the USA, all came in weaker, with the USA slightly stronger, but there is a negative situation happening in the industrial sector. And this is where the news is starting to kick in. First news story that we see is that Zambia needs alternative funding to meet local development funding gaps. As of 2022, local authorities are in debt 3.7 billion people. Watch it. The local governments. We're not just dealing with national government debt. Our local authorities are also having a little bit of a struggle here. 60 local authorities need about 4.2 billion kwacha to meet their funding mandates, to fulfill their mandates, but only received 2.8 billion. That's billion. That's meant to be there. SBC suggested that we need to start finding alternative forms of funding. I've often been talking about something called municipal bonds. Whether we can have them or local government bonds. Maybe that's what we should call them. But our local government's financials and their books are in tatters due to the way they were being run for a while. But if we can maybe get them back in shape, we can start talking about this. The late mayor of Lusaka, Mayor Kalumba, well, actually one of his... the late former mayor of Lusaka, Mayor Kalumba, was actually talking in 2016 that one of his goals was to actually bring a bond for the city of Lusaka. That was one of his goals, was to clean up Lusaka's books and then allow Lusaka city to run a government bond, to run its own local government bond, also to diversify the government bond industry. That's what happens in many other localities. You find that the municipalities are able to raise capital themselves directly on the market, diversifying where a lot of fixed income instruments can be held, and also giving them the power to raise their own capital and run their own developmental agenda. But it requires they get a rating, it requires their books are run well, it requires a lot of them. And unfortunately, local government has a history, not just in Zambia, around the world, of severe corruption. Local governments have histories of severe corruption. They're not monitored correctly. Their books are often shaky. But that is where we also need to start looking at. We also did see that markets have priced in the 0.25 rate hike from the ECB and the Fed. Focuses mainly on the forward guidance that we're going to be getting, because remember, this is important for us as well. But activity and lead indicators of inflation have softened in both and signaling an end to future rate hikes. Japan is expected to keep a loose economic policy, so we're expecting that interest rates in the global economy are going to stop being hiked or slow down in being hiked in the near future. We also did see that oil was up 2% to a 3-month high because of tight supply and Chinese stimulus. Supply is expected to tighten due to OPEC plus cuts, and the speculation that the Chinese government is going to push in a stimulus to help the property sector. That's a story that was read yesterday on Money FM. Also, in around the third quarter of 2023, we also looked at the International Energy Agency, which is forecasting the rise in oil demand to be about 2.4 million barrels per day, mainly due to China. And also, G20 has failed to come to a consensus on cutting fossil fuels, because some of the countries are saying, hold on. Some of you developed countries developed on fossil fuel. Now you want us to cut it? No, that's a no from us. We're going to need fossil fuel and carbon to industrialize the same way you did. Okay, we would like the luxuries of everything you have. We've also seen one of the bigger news, by the way, in the mining sector for a lot of people is that small miners' hunger for cash as copper prices have grown is sparking what we call mergers and acquisitions. So a fall in the copper price as having now a lot of people, I'm saying this because people are trying to fight the whole KCM and Mopani situation, because usually we get these bunch of activists who've never run a mine in their lives who have decided that they want to fight the power. One of the issues that you actually are seeing around the world is this is not just happening in Zambia. It's happening around the world. A fall in copper prices is having an outsized impact on small to mid-sized miners, forcing a lot of them to cut their output. Zambia is experiencing cut output. Some of them are now open to raising funds by having new investors buy some of them out. Okay, so I think this is waking us up to the reality of the global environment, that the copper profits are low, and as a result, outputs are down, and as a result, mining companies are bringing in investors in South America, in Canada, in Zambia. It's happening everywhere.
Can we pick this call? We have someone trying to call. Hello.
No problem.
Hello, good morning.
Good morning, Money FM Radio. You're live, and give us your comment.
I'm live now?
Yes.
Sorry, I will call it. I wanted something else.
Okay.
Like
All right, then.
Okay, thank you.
Okay, well,
This one happens to have called in the hotline. Of course, if you call in the hotline, you're live.
But anyway, if you do have a question, please feel free to call in if you have a question to answer. But I am just
Yeah.
giving you the reality that a lot of mining companies who are not the big ones around the world are getting bought out. They're getting invested in. So when you start seeing Zambia bringing in investors, take into consideration this is happening in Canada, it's happening in the UK, it's happening in Canada, it's happening in South America, it's happening even partly in Australia, it's happening everywhere. So this is happening. So far this year, there's been $22 billion worth of M&A. Global copper prices are set to fall down to as low as 7,000 kwacha per ton. Right now, they're 8,500 due to due to a lack of solid growth in demand from China, especially due to their factories. Their technology factories are struggling right now. In fact, Chinese unemployment, youth unemployment, has actually risen as high as 20%. 4 times the national average of 5.2%, because young people between the age of 16 and 24 are struggling to find work in factories and service sector businesses right now in China. That's how slow the economy is actually growing. It's resulting in high Chinese youth unemployment. That, Stephanie, that's our conversation in terms of all of that. Today, I just want to quickly drift into an interview I saw over the weekend. I know some of you people, you want to act like church people, like you were not raised in the 90s and the 2000s, but I'm sure you all know Jay-Z. And well, I'm sure most of you people know Beyonce, so therefore that's how you know Jay-Z. But we know Jay-Z from when he was Jigga Man. And he had this producer named Just Blaze, Justin Smith, who was his main producer. And he was talking on Bloomberg about his life story. So today I want to talk about 2 clues that people should look for whenever you're looking for what you could potentially become or potentially become very good at. There are 2 clues. Now, yes, as a believer, I always think God is very intentional, Stephanie, about the family you were raised in, the house you're raised in, and the time you are raised in. Okay, the time you grow up in and the family you grow up in, those are 2 decisions that are directly in God's hands. So I want to take a look at how he looks at this factor of the influence of the house you were raised in, and also the influence of the trends that were taking place in the time you were young. Because these 2 things have got a very powerful way of shaping your way of thinking, shaping your interests, and shaping your character, which are very strong in actually driving you to a specific career. So I want you to take a look at how the influence of his parents and the influence of the era he was born in shaped him to become a music producer. Sorry about that. Here we go.
In 1989, an 11-year-old math and music prodigy from Paterson, New Jersey, had an idea. A true product of the 80s, Justin Just Blaze Smith grew up simultaneously obsessed with the decade's 2 breakthrough innovations, personal computing and hip-hop music. While the 2 fascinations may have appeared entirely unconnected, Just Blaze knew the first time that he laid eyes on a drum machine that his passion for programming would pay off in rap production.
How did your parents' professional lives inform your career ambitions?
My mom was an educator. So if I had to say how her profession informed me, discipline. My dad was a computer programmer, but his passion was music, playing keys. You know, he played jazz organ and piano. So growing up around computers and his programming and growing up around him playing keys literally informed what I do. And I would play his keys. I remember one day, like I'm sitting there just essentially making a beat, not even knowing what making a beat was, right? Like I'm programming drums, I'm playing a bass line, I'm playing keys on it. And I'm thinking that nobody knows. And then I look up and my parents are both like looking through the door, like, and I'm like, oh my God, I'm gonna get in so much trouble. And they're like, no, keep going. You know, people always ask about like the secret to your success, and they always expect some big grand answer. And I'm just like, nah. It's the fact that my family was supportive once they realized this talent that I had. I started, I guess, what we would now call coding, 4th grade.
You also clearly were bit by the hip hop bug at an incredibly young age. 7, 8 years old, you're thinking about getting mixers and
Right.
DJing and whatnot.
I knew that it's what I wanted to do with my life. I didn't think that it would actually be possible. And, as time went on and I'm getting local DJ jobs and, making demos with the kids in the neighborhood, it always just seems like it's still just something fun to do.
In 1989,
So I wanted to I don't know if you, and hopefully you were able to hear it, but I wanted to just quickly tap into, because people always ask the question, what should we do? What should we build businesses in? What should we go into careers in? I think people, before you rush into the idea of whether you should start a business or not, figure out what you should be doing, whether you do it as a job, whether you do it as a business, whether you do it as a self-employed gig. You have to do something. Okay, it's not a business on its own with a name, or as we say in vernacular, zinache. A business on its own does not just bring money in. It actually has to do something of value in society. So whether it's a job, whether it's a business, whether it's a professional gig, it has to bring money in because it does something of value. So I think the first question everyone should ask themselves is, what thing of value can I do for society? Because people pay for what it is you have of value. So there are three elements to this man's story, and I'll talk to you about mine very quickly, and then I'll ask the question of everyone to start thinking for themselves. Whenever you're thinking about what to do, especially if you're young, you're thinking about a career, you're thinking about whatever, ask these questions. What were the influences of the house you grew up in? Okay, to your character and also to your interests, because the house you grew up in will do stuff like that. You notice he says his mother shaped his character, in that his mother was an educator, so she instilled discipline into him. Okay, the way to talk, the way to behave, staying in hours. If you're going to be a music producer, people, it's not clubbing and playing. Music producers stay in rooms working diligently. Okay, sound editors and producers really do a lot of behind the scenes work, and a lot of work goes into that. So it requires being disciplined to become a music producer, especially an excellent one like him. This guy built Jay-Z's sound, okay, and basically laid the foundations to the Jay-Z everyone knows today. So a lot of the work has to go in. So you need to be disciplined. The second thing you said was his father was a computer programmer who liked music. In the 90s, what was happening is that music was now moving from instruments towards boom boxes, sound boxes, and also guys producing on their laptops. So you needed to be technologically savvy to produce as well now. You couldn't produce those olden ways where they used to stick a microphone and people playing live instruments, and that's how you made instrumentals. No, people now made beats first. So this was the era of making beats. Then they were now taking it to a studio where somebody would record over a made beat, not where somebody was recording live in a studio with a band in them. So there's a transition that was happening in music. So he needed to understand technology. So raised with a father who was good at computer programming and also liked music, the influence of all of that came onto him. He was also raised around the time when personal computing was on the rise. So technology was becoming democratized, and also hip hop was taking off in the 80s. So the cultural trends happening around him and the house he was raised in nurtured a gift that by the time he turned 20 or so, it was so good and it was his time. I'll tell you the thing even about me. I was raised by an educator, and my mother was a teacher, my father was an auditor. So when you put these two things together, you get a financial educator. My father is a man of finance. My mother is an auditor. So you get a financial educator, which is exactly what I've become, a financial analyst, educator, and advisor. And it's actually built me into that era. So also the discipline of things like my mother as well also instilled it. Even my father is very hyper analytical. So I get that from him. Okay. So the influence of my mother and my father converged onto me to build certain skills and character within me. Also, at the same time, what you also find, by the way, is that I was raised in the time when stock markets were taking off. I was raised in the time when the Zambian economy stabilized. I was raised in the time when technology took off. So this is why I favor technology. This is why I favor financial assets. So, and I'm very good with these things because it was also the time I was raised in. So take a look very carefully. And I want everyone to ask this question. What about the house you were raised in, or the family you were raised in, and the era you were raised in has informed the career you are taking up? And that will actually speak to quite a lot of who you are. It doesn't have to be exactly that. I'm just giving you an example of how you were influenced. Because if you're asking the question, what is my gift? I would say this, and I'm saying it from, maybe it's my worldview of God gives you a gift, but my worldview dictates this, that God is intentional about where he put you when he made you. Okay? He's intentional about this because there's a gift inside you that needs to be nurtured. And he kind of figures that this is the environment of the soil, water, and sunlight that's going to give your gift the ability to sprout. And that is the thing that if you do it well, if you do it, you will probably find that that is the thing that will make you phenomenally more money, or give you more influence, or grow your career prospects much better than the other things that maybe what were you made for can often be symbolized, can often be picked up by what household you were raised in and what era you were raised in. I don't know if you have any comments on that, Stephanie, as we exit today.
Well, I think that's basically true. Now, you made me go back to, my own environment and, check how did I become who I am. And I realized that I think what you're saying is definitely true. It's the environment you come from. I think my mother also is a teacher. And obviously, I saw her, write every day, obviously also a public speaker. And today, I'm a journalist. So I know, right? The environment has to do with who you become.
And it's true. And you also grew up in a time when media was expanding. You grew up in a time when media became more liberal. So journalism became something that people could embrace more as well. If you grew up in a communist time, journalism may not have been the time that the career you would have wanted to pick, because it was very restricted in terms of speech. Because you grew up in free speech, journalism became something that was a trending thing happening around you. So also look, that's why I said also look at what is happening around the times you were born, and also inside the house you were born, and you'll probably pick up how your career came to be. I'll leave that there.
Definitely.
So pick your money maker, people, but but do some digging in history. Stephanie, I want to thank you for being my co-host and my co-pilot today. And to everyone who's been with us, I beg you, I pray for you to have a wonderful and blessed day.
Thank you. Till tomorrow again, Nyumba. It's bye for now, and always a pleasure to have you on board.
Cheers, have a good day.